Good afternoon, folks. Thanks for attending our webinar series today. My name is Tyson Mavar, one of the Chevron-focused retirement advisors for the retirement group here in Texas. And on today's webinar, we're going to cover the updated interest rates that affect the lump sum pension payouts for Chevron employees. Those of you who aren't as familiar with our company, the Retirement Group is an independent financial planning organization that specializes in helping corporate employees plan for and transition into retirement. We manage retirement assets for retirees of Chevron. We've done so for a little over 30 years. We use Charles Schwab as a custodian, and we're an independent company. Our focus is helping our clients from Chevron prepare for retirement and then transition successfully in helping folks minimize their taxes and ultimately maximize the probability of success in retirement. We have a whole host of complimentary services we recommend you take advantage of, especially if you haven't done so already. In particular, the retirement cash flow analysis, where we'll take your current retirement resources, your expected retirement expenses. We'll look at things like your ESOP, Chevron stock, and see if you qualify for net unrealized appreciation. And ultimately show you when we think is the optimal time to retire to maximize your benefits and improve the sustainability of your plan. Let us know if you're interested in having us do that for you. And we also encourage you to follow us on LinkedIn if you're not doing so already, as this is where we publish our webinar series like the one that we're hosting today. So, as many of you know, the corporate bond interest rates affect the lump sum payouts for Chevron employees. And it's a very unique way. It's different than every other company that pays a lump sum on their pension options for employees. The way that this works is the company will use first, second, and third segment PPA interest rates, or what are also called the present value segment rates. These interest rates are published by the IRS. And what's unique about Chevron's use of these interest rates is that they're looking at the third, fourth, and fifth month prior to the month that you commence your benefit from the company. So not necessarily when you leave the company, but when you start your pension. And those two dates don't necessarily coincide. So let's zoom in here to look at the most recent interest rates. So you can see now we have data available for March. You can see there's first, second, and third segment rate. Those are calculated based on short, intermediate, and long-term corporate bonds, respectively. We're also showing the February and January interest rates. And Chevron is going to take those 3 months and do an average, or what we call the blended rates, that will predict what the lump sum payouts will be for June retirees. So remember I mentioned third, fourth, and fifth month prior. The third, fourth, and fifth month prior to June is March, February, and January, as it turns out. Now below in this table, we also are showing the May and April rates, as well as previous months this year. And you can see that interest rates have sort of been stabilizing compared certainly to last year, where interest rates climbed very rapidly and lump sum payouts went down pretty rapidly. But what is, I think, important to focus on in this table is you can see the June interest rates. All three of these rates are higher than the three segment rates of May. What this means is that for almost everybody, a May commencement date on your pension is going to be more favorable than June commencement date because the interest rates are lower. Now, how much is a function of a variety of factors. Your age is one of those factors, your years of service, how long you've worked with the company. These are going to predict how much an interest rate change affects your lump sum. And it's also very helpful that there is an online tool through Benefit Connect that you can model different retirement dates, model different interest rate assumptions, and we strongly encourage everybody we work with to start getting familiar with this tool and utilizing it often as you approach your retirement date, because the way that Chevron looks at these interest rates could determine the best time to retire from the company, or maybe just the best time to take your pension. And in some cases, we've actually recommended our clients wait to take their pension. Oftentimes, this is as a result of falling interest rates after folks leave the company. Another reason we've recommended people wait to take their pension is because they retire, or leave Chevron at least, prior to age 60 and still have some age penalties on their pension. Even though you're still subject to interest rate risk when you wait to take your pension after you leave the company, there could be some arguments to do so, especially if you don't necessarily need the money. And most people that we work with at Chevron will typically either live off of their 401k if they choose to defer their pension benefit. Maybe they go get another job after they leave Chevron. Maybe they have other assets they can live off of. But it needs to be considered waiting to take your pension, especially if we know, as we can predict with a look back period on these interest rates, what direction interest rates are going. And if we can see that they're falling, we definitely want to consider deferring the election of our pension in an effort to get a larger lump sum payout. Also keep in mind, though, there's an opportunity cost of leaving your money in the pension, same as there's an opportunity cost of staying with the company. That opportunity cost is what rate of interest you could earn on that money if it was rolled over into, for instance, an IRA or into your 401k. And now with interest rates a little bit higher, that opportunity cost is higher. So this needs to be factored into the decision when to leave Chevron. Certainly there's a lot of merits to staying with the company, the biggest one being your salary, of course. Maybe some LTIPs that you have and other benefits, cheaper health insurance being one of those. But there are some detriments to staying at the company, and most of those have to do with what's happening to your lump sum, if in fact that's the option you plan on taking your pension from the company. And it doesn't always make the most sense. But we've built our cash flow analysis to evaluate not only the different pension options, but different timing decisions on when to leave the company, when to take your pension, in an effort to maximize your wealth and minimize your probability of failure in retirement, which is, of course, outliving your assets, as well as some other factors that we find to be valuable to the folks that we work with at Chevron. Unfortunately, statistically, we found that 74% of Americans do not have a written plan for their retirement, those that are over 50. Which, in our opinion, is unacceptable, given how many different companies, including ours, will do this for you on a complimentary basis in an effort to get to know you and an effort for allowing you to get to know them. We do this on a complimentary basis because we like to build relationships with folks before they leave the company. Whether or not you intend on doing business with us is irrelevant, because even if you don't do business with us, we're confident that you'll have good things to say about our company after you leave the company. And that's how we've grown our business for the last 30 years with the Chevron community. It's just by getting referrals and helping people put together the strongest plans possible for their retirement plans when they leave Chevron. If you'd like to get in touch with us, whether it's to request a complimentary retirement cash flow analysis, net unrealized appreciation analysis, which affects any Chevron stock you might have in your 401k, or if you just have some questions either specific to the Chevron plans or generic to retirement income planning, feel free to email us at our home office at info@theretirementgroup.com. You can call us at the home office at 800-900-5867. And you can even take a picture of this QR code on the left here that will allow you to get onto one of our Chevron-focused advisors' calendars, whether it's myself or one of my colleagues around the country. And again, here's that LinkedIn page QR code. Follow us on LinkedIn if you're not doing so already, as we publish various content, try to keep everybody up to date with what's happening to the interest rates, changes to the benefits plans, and retirement income planning changes in general. Let us know how we can help, folks. We're here to help. With that, we're going to wrap it up for today's webinar series. If you do have questions, feel free to call, and we hope to talk to you all very soon. Thanks again.